Yeah, it's your boy Crypto Blood, and welcome to another double spending episode. Today I've got my main man Rice Crypto. I was on his channel last week before we did our off the chain episode, I think 33. I was glad to really join him and Tim Picciott, also known as the Liberty Advisor, in this roundtable. We talked about this financial crisis that we're in caused by the coronavirus and got a lot of good feedback and ideas thrown around in this double spending episode. So enjoy it. Make sure you like and subscribe, and also subscribe to Rights Crypto channel. I'll leave a link in the description below. I'm out of here, people. Holla!
All right, ladies and gentlemen, today I am joined by Crypto Blood and Tim Picciott. Now, Crypto Blood, me and him have done some work together, and me and Tim have worked in a capacity via World Alternative Media. Tim is also known as a Liberty Advisor. He works, like I said, with World Alternative Media. He also works with Luke Radowski, and I guess that's kind of
he always messes up my name.
Yeah,
so
it's funny I mispronounced his name. So you deserve that, Luke. You deserve that. But yeah, with We Are Change and the backup channel Change the News. So I really appreciate both of you guys coming on the show, man. I look at you guys as peers, and both, I wouldn't necessarily say experts, but very, very knowledgeable on the subject that we're going to talk about, which is finances and economics, and discuss what's happening with this financial crisis and what appears to be an economic free fall meltdown. So before we get into it, what I'll do is I'll start with you, Tim. Tim, how are you doing today?
I'm just hanging out. We're super busy ever since everything, the world started imploding a few weeks ago. I did give a talk. I was the final keynote speaker for the second year in a row at Eric Apoko, and actually as part of that talk, I gave a speech on it was called what was it called? It was something called 2020, where we're going, how to invest, the stock market, the Fed, the economy, and in that discussion, I laid out all these different black swans that would eventually be kicked off by some sort of unknown black swan. Little would I know, what week and a half, 2 weeks later, it would all kick off. And then I gave my thesis on how to play this from an investment standpoint. And some of the investments that I talked about in there went up 600-700% in just the span of within like 2 weeks of that talk. So effectively, last year we went up about 25%. This year we're only down 5%, being fully invested into the market. So I've got some crypto bona fide stuff as well, along with crypto IRAs. And for the people that got in super early on crypto, I do different types of charitable trusts where they can legally avoid capital gains and do, like Charlie Lee, for instance, didn't really sell his Litecoin. He sold his Litecoin to his own charitable trust. And that news comes straight from Charlie Lee to me. So, I mean, there's a whole bunch of different things where I help blend the traditional world and the crypto world all into one. And I guess you said if I wasn't an expert, so I don't know if there's anyone that can count themselves an expert, if I wouldn't be one when it comes to
no, but that's exactly why I wanted to bring you on the show. And I really felt that you would bring value to this conversation. So how about you, CB, Crypto Blood? How you doing today, man?
I'm good, man. Living the dream. Just here in Michigan, it's starting to get a little hectic here with this COVID-19 outbreak. So we're climbing the charts. We're number 3 now.
It's crazy, dude.
I started following this back in January 22nd. This first video I did on COVID.
You've been killing it with the content lately too, man.
Thank you. And it's been a concern since then. And I don't know how little old me I don't know how many subs I have, internet connection, could understand that we would have a crisis here on our soil in the United States when we have billions of dollars invested in NSA and CIA and all of these governmental agencies that's a tax on our system and our privacy, how they didn't see this coming. So it's very frustrating to see. And it really exposes, I think this virus really exposes the inefficiencies in our system. And like the gentleman said, Tim said, we don't know what the black swan is. The black swan is until it happens. That's why it's a black swan. But we knew that something would prick this bubble, and this is it, a virus, ironically enough.
Yeah, I know, and it's crazy, man, because, I mean, we've all been studying economics, and, anybody who really understands economics knows that after 2008, our system should have crashed in 2008, and really we just did quantitative easing, Federal Reserve, central banks got in it, and they just put a Band-Aid on a broken bone and just delayed the inevitable. So, and before the virus, last year we saw the inverted yield curve take place, which is obviously a signaler of a recession. Every single time it's taken place, it's signaled a recession, at least a recession. And then we started seeing the repo markets break down and overnight lending to banks, and how the Federal Reserve and central banks had to get involved with more not quantitative easing and capital injections and all this. And then conveniently we have this virus that just happens to just have this odd fucking time, dude. Like it is just too suspicious, the timing of this thing coming out, which that is a completely different subject. But the powers that be are trying to use the virus as a scapegoat as to our financial problems, when it's really not the case, because we've been having the problems before that. But most people who are not educated don't see the truth and don't realize that what we're being told is we're just being fed a bunch of bullshit.
I mean, you have to ask yourself, why are companies, mid to large size companies, in such trouble with a shutdown just for 2 weeks?
I'll tell you exactly why they're in so much trouble. Well, it's because, companies like American Airlines, for instance, spent over 100% the past 10 years of their free cash flow buying back their own stock. Yeah. You had in the airline industry across the board, it's 96%. So they spent 96% of their free cash flow to buy back their own stock. So it wasn't for a rainy day fund. It wasn't for anything else. So what happens is when you buy back your own stock, let's say you've got a million shares outstanding and you're earning, $1 per share. Now, what if you buy back 10% of your stock? You still have the same earnings, but now you've got 900,000 shares. So now your earnings per share are $1.10. So all things being equal, your stock would then go up 10%. The executives have stock options that are tied to their stock price. They end up getting paid just a shitload of money when all their options go up, which is why you saw a record amount of CEOs step down in January, because they saw what was going on, because they had factories overseas, they had factories in China, they saw the devastation, and instead of warning people about it, they decided, people like Congress, they went in there, they sold stock, they bounced, they got out of there. And Chris said that this was like putting a Band-Aid on the problem. It was actually more like, giving the patient heroin and cocaine than putting a Band-Aid on it. And you guys laugh, but there was actually a quote from Richard Fisher, who is the head of the Dallas Fed, former head of the Dallas Fed. And about 3 years ago on CNBC, he said the economy right now is being maintained on, he said the economy in the past has only been able to be maintained because it's been on heroin and cocaine. This is his quote on CNBC, not mine. And now it's being maintained on Ritalin. Well, guess what? Ritalin wasn't enough. And now we've got to go back to, heroin and cocaine's not enough. Now we've got to go to fentanyl, maybe car bomb fentanyl, whatever other shit they dream up. But eventually, if you do that stuff, it's eventually going to kill you. And so right now, as a patient in the economy, we're going to eventually get killed. This is something that, at one point, the Fed tried to pretend that they could sell $50 billion of bonds a month, and now they're buying $100 billion of securities a day. You mentioned the repo markets. Well, the repo markets aren't even really a thing anymore, because the banks don't have to reserve
unlimited. Yeah, but what I was going to say, as far as why these companies can't survive with a shutdown over 2 weeks, is because of the zero interest money, this cheap money they've been lent over the last 10 years. There's been so much malinvestment, where you have companies that are around operating when they shouldn't be. You have even small businesses that are around and operating and they shouldn't even exist. But we've created this monster, and we can't even survive 2 weeks being shut down, because it's a facade. You know what I'm saying? It's fake growth. It's been fake growth before 2008 crisis. Yeah, I say it's been since we left the gold standard, in the 70s. So that was kind of the turning point in my opinion.
Was that 71 or 73?
Yeah, I think it was like August 16th, 1971, which is, it's funny because I got the same birthday as Richard Nixon, who got us off the gold standard. And Bitcoin was actually, the Bitcoin software client was also released on that day as well. So it's like all kind of full circle. So it was actually Zero Hedge was released on that day as well. Not the same year, obviously. Actually, Bitcoin and Zero Hedge were the same day, same year, just by complete coincidence. I don't think there's any conspiracy. I just want to point that out.
That's pretty interesting.
It's a pretty crazy fact. But yeah, this is being used as the skeleton key for everything else that, I'm calling it a pandemic, where this was going to happen no matter what. The collateralized debt obligations, the corporate debt that's going around, it was all just a giant house of cards. And this is all, my presentation at Acapulco was, February 11th. And in that presentation, I was pointing out that the corporate debt market, that about 50% of the investment grade bonds were triple B, which is one notch from being junk. And what typically happens when you get into a recession, you're going to see about 30–40% of those go from triple B down into junk. And then
fallen angels, yeah.
And then the next part of that discussion was, well, now because the market is now, there's so many ETFs and exchange traded funds, index funds that weren't really in 2008. Maybe, I don't know, I'm just pulling a number out of my ass here. Probably about 10% of all investments were in retail investments were in exchange traded funds. Today, that's probably, I don't know, I'm pulling a number out. It's probably 40 or 50 or 60% of new money going into these. But the thing is, on the way up, it accelerates the ascension, but also on the way down, it accelerates that as well. So if you have a triple B bond and now all of a sudden it's rated double B, what happens is now those funds are forced to sell. So when they're forced to sell, it then creates even more selling, which then begets even more selling and creates this whole snowball. So what the Fed did about 2 weeks ago is they actually went in and for the first time ever and actually started buying ETFs for corporate bonds. So one of them was called, I am a financial advisor, so I've got to say not financial advice, just because it's in the news, don't buy it in case the SEC watches this, but it was called LQD. And they were going in there direct. So instead of having to unload their bonds that they're at all-time highs, so mind you, these are people that bought bonds at all-time highs. They're basically a bunch of idiots doing this. And then they got all bailed out. So we're giving them 100 cents on the dollar, 100 cents on whatever bullshit appreciated levels they went to. And these companies now get, bailed out. And because the rates can never go up. I sent an email to a client in 2011. It got intercepted by my compliance. And they said, hey, you can't tell one of your clients that you think the Fed's never going to raise rates, and that if they do raise rates, you're going to have to, renege and all that, and have to basically reverse course. And I'm like, well, that's what's going on. So if you're an advisor, you're not allowed to actually give advice, which kind of leads into how I lost my job for speaking at Acapulco 3 years ago. But that's a whole nother rabbit hole. But yeah, the whole economy is just predicated on fake money. And actually, I got this in the mail the other day. So hold up. So I got the Trump Keep America Great Again money gun with a bunch of fake money. So we can start making it rain, baby. So we got the Trump.
I thought that was a money gun back there. I didn't know.
That's awesome, man.
And that's only like the second. I just got it. That's only the second time it's actually ever worked. So I just made it rain over my desk. But I got more fake money where that comes from.
You can get your kids to pick it up after we're done.
Yeah, I will. Yeah, I'll make it a game for them.
That is so awesome. Did you guys? I haven't had a chance to look because I've been busy doing interviews today. I had just heard something briefly right before we started about the president meeting with oil companies and like oil companies asking for a bailout, which I think is freaking ridiculous considering how much money the oil industry has made and profited over the years.
It's not ridiculous. It's a real situation for a lot of the shale oil companies here in America, simply from what Saudi Arabia did with their little fallout with Russia.
Right.
And they're colluding, I think, Russia really is trying to smash a lot of the oil shale companies here in America. But it's a serious situation. But again, it just falls back, in my opinion, to the fact that they had so much cheap money to expand their operations over the last 10 years, when in normal conditions they wouldn't have been able to do that.
Okay.
The other thing is, this is really a bailout. It's not just everyone focused on the stock market. The bond market is actually much bigger than the stock market, much bigger concern. And this is all about bailing out the bonds. You've got we just talked about the investment grade market. Well, the triple C bond market, which is the biggest pile of shit that exists. I think it was about 10. We did a video on this either yesterday or 2 days ago. There's a Financial Times of London article where it showed that it was about 10% of the triple C bonds, which is, that's like one notch away from, basically the company going bankrupt. About 10% of that market was from the energy companies. So this is about bailing those up, but those companies should have never existed. I mean, even guys like, I don't agree with Max Kaiser and some of the stuff he has to say when it comes to environmental issues, but these fracking companies, essentially what they were doing is going in there. A lot of these wells, they could only, extract oil out of it, or these, tar sands or fracking. They can only do it for, let's say 7 or 8 years, but then they sell like a 30-year bond. Well, those companies are going to be bankrupt and leave a huge environmental disaster And I'm not some leftist, greenie tree hugger, but the thing is, this would have never existed if there was real capitalism and we had real rates, because these companies shouldn't have existed. And I mean,
Right.
I was talking about how they were probably just going to get out of Dodge. And the thing is, you have to have such a high oil price in order to sustain it that, you know, I don't think they should be getting bailed out. You know, guess what? Someone's going to come in there and buy them. And you know, are they ever helping me out? I mean, look at the banks. I mean, the banks are, you know, charging on average right now in America 17% interest rates. And then, you know, even as part of this whole, you know, $2 trillion stimulus, the parts that are going to the banks, which are to the small businesses, which is about $350 billion, those out of that portion, the banks were like, you know what, listen, we're not gonna let people get these loans for 0.5%. They have to be at least 1%, or else we're not gonna do it. But they don't have to put up any collateral. They have no risk, and it's free money. And these, you know, people wouldn't even exist if it wasn't for the fact that they got bailed out 12 years ago and then made a bunch of money off that. And then they wouldn't probably still exist if they didn't get bailed out 2 weeks ago. So the whole thing's a fraud. It's all returning into Zimbabwe. But in the interim, though, I did at Jeff Berwick's conference, the Dollar Vigilante, afterwards, there was an all-speaker Q&A. And in there, I talked about how I thought Bitcoin would go down about 50 to 80% during the initial stages of the financial crisis, which, you know, I'm lucky I didn't get, you know, thrown tomatoes at for saying that at Anarchapulco. And I'm pro crypto. I just thought that was
You're being a realist,
happen. Being a risk asset.
I've been saying the same thing. I said that Bitcoin. I've been saying that Bitcoin has been going to go down first, because we have to realize that Bitcoin is still a risk asset. So if you have a situation where everyone is panicking, it's risk off. That means risk off means risk off. That means everything. So you're leaving stocks, you're leaving cryptos, you're leaving real estate, art, whatever. It doesn't matter. You're going into cash, you're going into bonds, and that's what's going to happen. So I think right now Bitcoin and cryptos are somewhat positively correlated to equities for the time being. That won't stay that way. It's, you know, historically around zero correlation. But I think right now you're going to have some risk to the downside with cryptos for a little bit. But after that, though, after all this is said and done, I think crypto is going to do awesome.
Well, yeah, it was like 2008. Once the dust started settling, because everybody did the same thing in 2008, with the exception of crypto, because it didn't exist. Everybody sold off everything. But when the dust settled, people went back into those hard assets like your gold and your silver, and you saw those markets start to explode. We're going to see the same thing happen. I mean, that's why, even though you're seeing the price of silver and gold being manipulated by these paper bonds or paper derivatives and the trading the way that it's done, the physical gold and silver is not going for the prices that are going for on the price markets. Like I think and around here where I'm at in Winston-Salem, I think that there is some places I can get access to silver, but it's like $25 an ounce is what they're asking for it.
I think you're going to see precious metal companies go out of business as well.
I mean, it's possible. I mean,
no, I mean they won't have anything to sell.
Yeah, because we are, like, I know did the Treasury not run out of the American Silver Eagles? I heard about that. And now we're hearing about mom and pop silver places that are running out. So I mean, at least people are getting smart and, you know, buying up these different types of hard assets, these precious metals, while they have an opportunity to, because it's and then even with gold, I'm hearing now, like, the best thing to do is to buy, like, what was the word, like collector's gold, because there's a lot of different ways that it falls under, I guess, under federal regulation. And then, you know,
actually collector's gold's even worse from a tax standpoint, because you get taxed as a collectible at 28%. So
wow.
So it can be even worse. And then also with some of the collectibles and the rare numismatics, that's where a lot of people get screwed. So I mean, not financial advice, but I mean, I would recommend just getting like regular bullion or something, you know, more common, like an eagle. Whereas people try getting these, you know, 18 whatever coin, and then, you know, it's marked up a bajillion %. And then if you need it in a real, you know, shit hits the fan environment, the person that wants it is going to probably screw you and just give you like what the regular price of gold is anyways, you know. So I would probably just be more a fan of just regular, you know, bullion or.
Thanks for clarifying that. Do you think either one of you, and I like both your answers, that the Federal Reserve and the central banking system is going to be able to print their way out of this particular problem, at least on a temporary basis? Or do you think that this is still the kind of beginning of the actual full-on collapse? I guess I'll go with you, CB, first.
Oh, okay. All right. Yeah. So I think, and unfortunately, I think they're still going. You got to remember, like, the U.S. is the best house on a bad block. If you think we're messed up, Europe is even worse.
Yeah, I know.
So it's like in China too, like that's another story that we're not talking about really, is the fact that now we're seeing countries and companies starting to turn against China, which is good in my opinion, but they're starting to really finally question what the hell is going on over there and really look at how much leverage and dependency they have on that country. So I think China is really in a bad situation, man. They've got ghost towns all over the place. They're, the numbers are all fake. And so this virus really exposes them, I think, and it's going to implode. But yeah, I don't know, man. I still think the best place to be is the United States. Unfortunately, I mean, I have to say, but go ahead and see what Tim has to say about that.
Yeah.
Yeah, I mean, just so some context for your viewers. I mean, when I graduated college in 2008, wanting to become a stock analyst, so probably the worst time ever to try to become one of those. I mean, I might as well try to become like a bikini model or something in 2008. I mean, zero chance of that happening. So but prior to that, I was actually in a class on the Federal Reserve. Now, I was the only one in this class that was on this challenge thing because I'd rather hang out at the sororities, on the weekends than be with all the, nerds going on in New York City. It was my classmates. I was the only one that wasn't on this class just because I didn't really care at the time, but I knew all the information. They won the national competition on the Federal Reserve against Harvard, Yale, MIT. Our saying in the class was "In Fed We Trust." And then one day, how I got into this whole rabbit hole, just a quick aside, is that one day I'm at this, one of my clients' houses, I see this guy who looks like Rob Zombie, his hair is, down to here, and he's telling me the Fed's private. I'm like, dude, you're full of shit. Like, I've got a Series 7, Series 66, Life X and Health, chartered planning counselor, on my way to becoming like one of the youngest certified financial planners in the world. I'm like, dude, you're full of shit. I'm going to prove you wrong in like 5 seconds. So then he recommended I watch Freedom to Fascism. That led me to Creature from Jekyll Island, which then led me to everything else, where I am, today talking to you guys. So I only looked into this because I didn't believe what I was being told. But I mean, the Fed is, that's a whole nother subject. The Fed is a complete scam. And I don't know if I can share the screen on here if it's going to mess up the recording. Feel free. But yeah, actually, I better go see because I've got this kind of weirdly positioned right now. But this is John Sneisen. So I think you're aware of him from World
John Sneisen. He does a lot of analysis work with World Alternative Media, and I know him and you have a show at the Tim and John Show.
Yeah. And so we're taking a look at the Fed balance sheet. I mean, look at that hockey stick right here. Mm-hmm. I mean, it's complete going up. Now, I originally thought things were going to collapse.
Unfortunately, we can't. I don't know if you can move it, but because of like where we're positioned at, let me see if on my end, if I can. Yeah. I can move us on my end.
Okay. So all right. Well, anyway, so what happened is, so basically in 2014, about right around Halloween time, the Fed stopped printing money, and then the graph goes like this, and then all of a sudden, then it goes down for a tiny bit, and then it's a complete hockey stick all the way vertical up. Now why this whole thing has been strung along for so long is that in late 2014, as soon as the Fed stopped printing money, then the Bank of Japan massively increased their program. Then a few weeks after that, the European Central Bank pulled a program that I don't even think they're even allowed to do, just out of their ass, and they started printing money. And so it became this like hot potato of, okay, it was the Fed's turn for several years. Now it's your turn. Now it's your turn. And then the Fed then had a confidence game where under Obama, there were so many bad things going on economically that they had excuses to not raise rates. So then when Trump got in there, I actually had a presentation I made January 2017. It was filmed March 2017, and actually I was an opening act before Adam Kokesh at some event out here in Arizona. It was called The Trump Effect and Why Good News is Bad News. The entire premise was Donald Trump would have, and this all ties back into the Fed, that Donald Trump would have a lot better news relative to Hillary that would make the stock market go up, which is still a contrarian thought at the time. And then all this quote unquote good news, and Trump, being a bullshit artist, would then, pump things up so much that then the Fed would lose excuses not to cut rates. Then the rates would have to go up because things were so good, and I'll use that in air quotes, that good news would then lead to the Fed raising rates, which would be the bad news, which then would pop the bubble. And then almost literally just nailed it. Like nailed it to a T. Then had a podcast May 2018 called The Perfect Storm is Brewing, where I detailed, okay, if you're going to sell $50 billion of bonds a month, how are you going to do it? I mean, right now, the biggest buyer of Federal Reserve bonds was the Federal Reserve, and now you're going to be the biggest seller. I mean, I don't know how that's going to work. Second biggest buyer is China. Oh yeah, we're in trade war with them. I mean,
Right.
in case anyone is paying attention. Number 3 is Japan. Oh, they're the most indebted motherfuckers in the entire world. So not great to have them be your biggest buyer of debt. And then even going back to Japanese, they buy about 87% of all their ETFs are being bought by their central bank, which is basically fascism. That is the merger. If you have the state,
the merger of the corporations and state, yeah, which almost seems like to be sort of what might be taking place here, possibly.
Oh, exactly, yeah, but it's Republican fascism, so it's okay now. So it's not. It's like we have democratic socialism, Republican fascism. So it's Trump.
So can we turn our way out of this mess? Is that can the Fed do that?
No, I mean, yeah, in the short term, yeah. And there's been 3 central banks before, or 2 other central banks before in America. There was one that ended in 1812. So in your history books, that's why the British came over here and burned down the fucking White Houses, because they owned it, and then the charter got revoked. Then the second was Andrew Jackson. He said you're a den of eternal vipers, my eternal goddess to rot you out. And then he was attempted to be assassinated twice. Both guns went off, misfired at point blank range. This is the 3rd version of the Fed. And it's just like the other 2, this one's going to end. It's going to end itself. So I used to be a big end the Fed guy. That was like my whole big thing. And now I'm like, I don't need to focus on ending the Fed. They're going to end themselves. So that's why I'd rather promote crypto, because I feel like the best way to end the Fed isn't to, write chalk out in front of their, stupid headquarters or something. That the better way to do it is to expose to people what they're doing, what they're behind, and then, promote crypto. But yeah, in a short term, who knows what type of rabbits they can pull out of their hat. I mean, well, we know what rabbit. The rabbit is to print a bunch of money. We know exactly what they're going to do, but eventually it's not going to work. It's already, you would expect that if you had a $6 trillion program, that the market should just be, at like 50,000 by now.
You would think.
But yeah, they don't.
Okay, well, with all that being said, with us going into like QE infinity and putting all these new paper money out and new digits on the screen, essentially, do you think that we're going? No, I'm not saying yet hyperinflation, but do you see us going into an extremely higher inflationary period, sort of like what Japan experienced? Because when Japan did their quantitative easing, they went haywire with it. It used to be. I talked to Roger Beer about this. It used to be 1 yen was equal to an ounce of silver. Now it's like so devalued. I think that, and I'm not even sure the conversion rate, but it's something like 100 yen to $1. So it's like it's not quite hyperinflation, but it's an extreme form of inflation. Do you think that we're going to see something like what's going on in Japan happen in the United States, and or do you see us actually hitting like true hyperinflation like what Zimbabwe has experienced, or like what Venezuela is experiencing? Do you think?
I mean, to the crypto blood's point, I mean, we're, the cleanest shirt and the dirty laundry over here. And so people are going to flock into the dollar even heavier. And
which is a problem too, though, Tim.
Yeah. I mean,
like the Fed doesn't want a strong dollar either. So they're like stuck on both sides, bro. And I think when Europe falls, when we see Deutsche Bank finally kick the can, what's going to happen? Everyone's going to flee. They're going to flee into the dollar. You're going to have 120 plus Dixie.
Now, is that going to affect like other fiat currencies though? Is that going to bring the purchasing power of those? Is that what's happening in Australia with the Australian dollar right now? Are all these other fiat currencies going to go down because everybody's going to flock to the dollar?
Well, the thing is, eventually the flocking to the dollar, the strength will then end up being the weakness, because a lot of other currencies borrow in the dollar. So if you're over in Australia and your currency goes down 20%, now you've got to then pay back 20% more. Yep. So eventually that strength becomes weakness. There's another concept known as Triffin's dilemma. And Triffin's dilemma, I mean, it's
so we got 10 minutes, guys, real quick. I'm sorry. I just let you know because of my limitation on Zoom.
Yeah, basically Triffin's dilemma is the notion that who's ever the world reserve currency has to create this excess liquidity. Then eventually that excess liquidity, it makes it the reserve, will then eventually lead to its downfall. And so eventually, like all fiat currencies, it's going to lead to its downfall. It's going to take a lot of people with it. People will probably pile into cash. And so I call that, I've called this for like 12 years, going broke safely. You just keep all of your money in the bank. And so they're going to probably rob you through your, I think there's going to be a hyperinflation of financial assets. So I think eventually you're going to see the Dow well over 1 million. I think you're going to see S&P, into the tens of thousands, not because things are going great, but because we've hyperinflated. Go back to Germany, 1911 Germany, the stock market was about 200 to 400. I know, obviously it's 100% difference, but by 1921 it was 21 million, and by 1922 it was like 27 million. And now people weren't doing great in Germany, especially if you're Jewish. But what's going on now is it's because their currency got eroded away, and if it costs 100 times more to buy a loaf of bread, then who cares what else is going on? I mean, people look at this. People are hoarding toilet paper. So literally toilet paper is at some point might be worth more than a dollar bill at the rate things are going. But it's going to be a while. It will probably happen overnight. It's probably not going to be tomorrow. But it's like if you're a turkey. One day it's going to be Thanksgiving, and you're going to be, and someone's going to eat you. But 99% of the time, it's not Thanksgiving. So eventually it's going to be Thanksgiving, and
that's a good.
The world only ends once. Probably
not going to be tomorrow, but eventually it's going to end. So
that is so crazy, man. Was there like, I guess because we are running out of time. Was there any final thoughts that you guys wanted to add to this? I want to upload this video tomorrow too.
I mean, I guess my final thoughts would be, where things are going is they did a trial balloon with this digital dollar. And then what they're going to eventually do is they want to have, so crypto can either be the most freeing thing for humanity, something like a Monero, or it could be the most, lockdown, mark the beast, track, trace, surveil you, get tied in with social credit. And, you didn't get your vaccine. Now you can't even travel or spend your money. And so, you can see where this is eventually going. And this sounds like, crazy, far out conspiracy theory. Well, maybe a month ago. Now it really
it's just realism, dude.
No,
it's exactly. Staying open-minded and being a realist is all it is. And I'm in the same boat, dude. That's why I wanted to have this conversation with you guys. You guys are like-minded people, so.
Yeah, but if somebody wants to get at me, I've got the libertyadvisor.com where it has, different information where you could schedule with me directly from there. I can do IRA rollovers, also like if you own a company, I can do, 401ks, things like that.
And I'll have links down below for everything for, how everybody can follow each one of you as well. And I definitely would like to do something like this again.
Yeah, we need more time, man.
Yeah, sorry, dude. What about you, CB?
Man, I mean, last words. I don't know, man. I'm just, I'm more concerned about social unrest. I think this little bailout they gave to Main Street is a joke. It's not going to do anything. People are going to start panicking. I think you should be really looking at supply chain issues from a food standpoint. People should be really paying attention to that and preparing, getting food now, because I think that's a possible headwind that we're going to see here in the coming month and a half or so. So I'm just kind of more concerned with our social unrest. That's kind of what's on my mind right now. So people should really be preparing.
Well, and the virus known as the government. I mean, that's it. They're using this as a scapegoat to do everything else. I mean, John Stice and I had a show called, this is the economic 9/11, and this is and actually more people are going to die from from the economic fallout than probably the virus fallout.
Right.
In my opinion.
Right.
And
it's sad.
Why doesn't everyone just have a month of food supply? Why don't you have 2 weeks of food supply? And in this type of environment, why don't you have 2 months of food supply?
Right.
The fact that even that now people are basically fiddling while Rome burns is just amazing. I bought food years ago. I'm growing an aeroponic garden right now that I just started. I bought masks.
I saw that as a tower garden, right?
Yeah, so I learned how to do that like 4 or 5 years ago, and then my daughters were born, and they started pulling all the stuff out the bottom, so I had to put it in hibernation. Anyways, we got that back growing now, but it's not because I want to grow food. It's because it's a pretty that's the most basic thing you need is food, water, shelter. If you don't have that, what do you have? And now we're being forced to shelter in place, and I think this is all a beta test of what will the people put up with. Will they put up with keeping them in their homes? Will they put up with a digital dollar? Will they put up with, and so the amount of tyranny you get is the amount of tyranny you put up with. And the average American is sheep. They're putting up with a lot of bullshit. And unfortunately, because there's so many sheep out here, it's guys like us over here who are helping take the lead and all this stuff. And I'm sure a lot of people watching right now. But yeah, I mean, just watch out for the mark of the beast crypto. I mean, I think that's where things are headed. And what they did 2 weeks ago was just a trial balloon.
CBDCs are coming. you know,
No,
I
they
think,
definitely are, and
yeah.
we're gonna do this again. I'll check with you, Tim, about your availability. I'm sure a lot of us have a lot more time, even if we have to do something in the evening. I found this conversation to be super valuable. We are recording this on Friday, April the 3rd. I'm going to release this on Saturday, April the 4th, and at the same time, ironically, I'm going to be on Crypto Blood's channel, so you can check me out on Crypto Blood's channel. We're going to be going live. What time are we doing that? Is it
8 p.m. Eastern
Standard
Standard.
Time?
Mm-hmm.
So 8 p.m.
Tomorrow.
Eastern Standard Time. It's a good way to plug what we're going to be doing. Maybe we can even continue a little bit of this conversation
Absolutely.
in the live that we're going to be doing. And I definitely would like to do a follow-up. I'm going to have links down below for how you guys can follow both Tim and Crypto Blood. Guys, I really appreciate your time, man. You taking the opportunity to do this. I really enjoyed it and found a lot of value in this. And ladies and gentlemen, as always, I encourage you to be the change by practicing change. And I love you all.